Hey guys, let's talk about central bank digital currencies, CBDCs, and stablecoins. What's the difference between CBDCs and stablecoins? The stablecoins would be things like USDT, USDC, DAI. So all any of those stablecoins that are linked to a currency that you get one to one is called a stablecoin because you get one to one equivalent. They claim that they have those funds and they try and put that aside for you. So when you buy that crypto, they're telling you that it's one to one against the dollar. On the other hand, let's compare that to a CBDC, which is a central bank digital currency, which in this case, if you look at something like the euro, they've got a euro and they're going to have a digital euro as well, which is a one to one. So that in this case, they're the ones asking it, they're the ones actually issuing it. Okay, central bank is issuing this and giving you one to one against their own currency that they issue. So the average person gets confused about this and go, what's the difference then, right? What's the difference between a CBDC and what do you call it, a stable coin? So let's talk about that. So number one is clearly the obvious, right? Who issues a CBDC? Is the central government, right? On the other hand, who issues a stable coin? It's a private corporation. USDC, for instance, is issued by Circle. DT is issued by Tether, USDT. What they do is they offer one to one against the dollar. Okay, and what they do is, which is quite funny, and I'm throwing this out there so people know this. Most people don't know this, right? You go with the marketing. Since a lot of people hear about USDT, they buy USDT. Oh, it's a one to one against the dollar, you buy it. Okay, then if you want to be exposed with a cryptocurrency and you're afraid of the fluctuation, you buy the USDT. Okay, but it's still issued by a private corporation. So if you're worried about banking, if you're worried about the bad old government, be aware that when you go to a private corporation, that corporation is more private than the government. The government are useless, okay? Just so you know, you can argue to tomorrow the governments are useless, they waste money, they lavish spending. Corporations are worse. Yeah, so I can tell because I've seen a few banking. I worked in banking all my life, and I can tell you a lot of banks have closed, right? So corporations, private corporations are worse than banking government. I can tell you, you can argue to it tomorrow, but I've seen, you know yourself how many corporations have just gone bankrupt. So who am I? I'm the CEO of Orukka. Orukka is a smart payment ring. Speaking of bankruptcy, we try not to make sure that our customers are. We're a small company. We just started, but we focused on what matters, which is our customers. Customers drive you. If you don't get value, you're going nowhere. If you go and borrow money, which a lot of people do, and you don't have the customers, that's gone. So we focus on customers. Orukka is a payment ring that you can tap to pay with your ring. So you don't need your banking app, you don't need your wallets. You can just tap to pay. You order the ring, you top up on our app, the Monesave app, and then you go your way. If you want to go for a run, tap to pay. You want to travel where you don't trust, where you trust, boom, tap to pay. If someone snatches your phone or snatches your wallet, you're not snatching this ring anytime soon. In truth, I'll tell you, leave your wallet, your phone at home, especially if you're traveling, if you're going to a concert, if you're going for a night out, things like that, you can tap to pay. We're fairly new. We launched 6 months ago. We have customers across 21 countries. No marketing. This is the marketing. Education is marketing. That's how we get our customers. If you know about it, you know about it. If you don't know about it, that's fine. Yeah, we see a lot of customers coming to us. Actually, some customers have told us that people think this is Aura or this is, Galaxy Ring. That's good. We want that, okay? Kid you not. We want that. We don't even have to do. We don't want to do any marketing. If we do any marketing, we fail. In my opinion, we try not to, but we'll see. Some maybe in the future. But my point is, because this is a banking app, we don't want to advertise it. Okay, if you think it's an Aura ring, let it go. No one's stealing your Aura ring because it's a health ring. It's a simple health ring. But when it becomes a banking app, as the more banks that we have that we grow, then the more worried I would be. I'll be more worried of my customers at that point. But right now, people steal this ring, you can just block it on the app straight away. If someone steals it before they get to where they're going, we block it. In fact, we have a new one coming where you can actually, it's linked to your health data so that if someone runs away, unless they're the exact frame as you are, we're going to block it because the person has stolen your ring. We know. That's what's going to happen. But we also have another one, which is an AI ring. You actually talk to the ring to transfer. I'm testing that. We're all testing that internally. When we launch that, that's another great one because what will happen is someone steals your ring and they try to transfer money. We would know based on the voice that that's not your voice. So it's a very, very interesting space, very niche product, very interesting space. I call it niche, but in truth, we're talking of millions of people at this stage. That's niche. Okay, 7 billion people. How many people want a ring on their finger? A lot. How many people want their banking on their finger? A lot more. And so very interesting there. Sorry about that diversion there. I was talking about the product. No, but I say that because it's interesting to know that we are independent here, right? So that means we care about customers. However you want to pay is what we care. If you want to pay with USDT, so be it. If you want to pay with fiat, so be it. As long as you're not paying with Apple Pay. If you want to pay with Apple Pay, you need your phone. Okay, fine. If you still trust your phone, the battery's flashing there. I've got 20% left. I don't trust this phone to last me the entire day. Yeah, so I don't rely on Apple Pay for my payments, okay, because of battery issues. Because I also worry, I live, again, I travel a lot, but most of the time I'm in London, New York, Tokyo, Thailand. So I'm always in a country where, it's metropolitan, number one. Number two, there's a risk of phone getting snatched. If you live in a quiet neighborhood with no one, then you're fine. Keep using your phone, hold your phone up, no problem. But otherwise, if you worry about your phone battery dying, if you worry about theft, worry about forgetting your phone, just wear a ring. So the point I was trying to make there, let's go back to the USD, the CDBC and stablecoin, is that stablecoins are issued by private corporations that want profit. Okay. And what they do then is, just so you know, how they make money is that they borrow money, or they borrow money from the government. So the USDC is backed by treasuries. And treasuries is just basically money that's borrowed from the government. So if you borrow money, if the government is borrowing money, they're borrowing money from you, and so you have a stable coin. That a stable coin is basically you trying to avoid the government, but the company that you're giving the money to is actually they're borrowing from the government. So it's a funny circle that you're going around. Funny enough, USDC, it's they're issued by Circle, a company called Circle. There's a weird circle that no one's talking about. Okay, why are you ordering and buying a stable coin that is still invested in the government that you claim to hate? Most people that are going to stablecoin, they're going to stablecoin because they don't like the government, they don't trust the government, they think you're spiraling out of debt. Okay, you're spiraling out of debt. Guess what? You're going into the government anyway to borrow their money, because USDC, they were looking at the numbers the other time. USDT are one of the highest buyers of government debt. If the government fails, USDT is failed. If USDT fails, anyone who bought the money, it's gone. The money's gone. But pending that, just so you know, pending that, what they do is they actually borrow the money. Okay, they earn, your money earns interest. So what they do is they go in, they borrow that, and then they get 4.5 or sometimes 5% interest from the government. Sure, you're asking, where does the money go? They keep it. They're a private corporation. That's the problem. So that hopefully I've narrowed that down, right? So when you think you're buying a Bitcoin, you go and you buy USDC or USDT. You're buying the USDT for, let's say, $500. They hold the USDT and they tell you, hey, you will get your $500 back, and you think it's the best deal on the planet. You're like, oh my god, what a cool idea! Got exposure to Bitcoin. I've got Bitcoin to crypto or whatever it's called, and I get my money back. Yes, but that's as silly as putting your money in the bank. In fact, your bank will give you interest 0.05, and we know that's crazy, right? But you take the money, put it into USDT because of the stability, but you're paying for that stability by losing interest, which is a lot. So we're looking at what do you call Circle last time. Circle have, in terms of how much cash they have from people like us that just go in and drop money with them, right? 73 billion in reserves. So they just have that real money, real cash. When you go and you buy Bitcoin USDC, what you're buying is you're actually buying you with real money, and you're giving them for crypto, which they issued. They give you a crypto and say, hey, here's an issue. So if you go with $500, say, here's $500 USDC. It is not, unlike Bitcoin. Bitcoin is actually, immutable. Bitcoin is scarce. These guys can issue as many as possible. They have a one-to-one reserve. So whenever, just like they've been a central bank without being a central bank, without the license, without the regulation, they've been a central bank, because when you go to them and give them $500 pure cash, they take the $500, they give it to the government or treasury, or just hold it in cash. And then what do? They give you crypto. Then you're happy that you got $500 of crypto. Yeah. So that's one. So one thing is to notice that these guys have a lot of reserves, and of that reserve, they get 4%, sometimes 5%, depending on the treasuries, the government's treasury or government debt that they buy. And where does it go? Give or take, Circle. Let's talk about Circle. Circle, I know, because again, we're working with Coinbase, right? Coinbase, you can top up this ring with Coinbase or with Binance. But Coinbase actually bought into Circle. So Circle, or they keep of that 4% that they get from the government, from your money that they give to the government, they get 4%. Let's assume of that 4%, they keep 30%. Yeah. So they keep 30% on 30% to themselves. And the Coinbase takes 50%. Sorry, an email just came through there from one of my customers. My team is looking into it. If I need to drop off, I'm going to drop off for that. I take customer queries very serious, guys. I get a copy of all escalated customers, which is very interesting because banks don't do this, right? Banks just leave these things, right? And that's one of the things I wanted to avoid with the ring, right? So if you have an audit issue, if you have and I'm going to have a query, and I'm going to put a video on this one as well. And if you have a compliance issue, your bank just freezes the funds, okay? And they don't tell you what's up. And everyone's scared of that as well. And even the person picking up the phone and talking to you is scared of compliance issues. They don't want to get into compliance, they don't get into trouble, they don't want to tip off because you're under investigation. And my point is, I think some things are just crazy, silly. I mean, if someone spent the money on crypto, you can ask the question and go, hey, when you opened up this account, you said you don't do crypto. How come you're doing crypto now? It's as simple as that. But because there's a flag that goes off, they just stop immediately, which is something obviously you have to be in banking to know that. If you've worked in banking all your life, you know how this works. You can train your staff. So I train them, and then obviously if you have any question, they come to me or the board, and then we go through it. I have a lot of advisors as well. So let's go back to Circle now. So Circle keep, a lot of that money, of that interest, right? So when you give them cash, they go invest the money and they keep that return for themselves. They keep exactly about 40%. Coinbase keep about 50%. And then give or take, they have expenditure here and there, 10%. That's where all that money is gone. But they hold the cash for you. My point is, you should have just left that cash where it was. If you want to get into crypto then, or if you want to think about, investing in crypto, then wait for CBDCs. Because CBDCs is exactly what you're doing in stablecoins. People make the mistake of comparing CBDCs to Bitcoin. CBDC is not Bitcoin. CBDC is a central bank deposit digital currency. It's a digital currency that is centralized to the government. So it's not CBDC and it's not Bitcoin. Sorry, CBDC, but it's not Bitcoin. Bitcoin is decentralized. If you want to be hidden, if you don't trust the government, buy Bitcoin. But if you don't trust the government, don't buy from private corporation. Just go to central bank again. If you really want to go into a private corporation is the one issuing you the money, and they use the money and then they invest your money in the government anyway. So you might as well just go to the government. It's a vicious circle. I think I'm going to title this video "Vicious Circle." It's a vicious circle because you're taking the money, avoiding the government, giving it to a private corporation that you can't trust, that is barely. I mean, these guys suffer to get audits, and when they put the audits together, people don't trust it. The audit is not signed off, and then they pass it on to the government anyway. It's just a joke. Oh, and wait a minute. Some people, I'm sure someone's going to argue and go, well, I get an APY on my Bitcoin. Okay, boom. I can tell you, number one is you possibly do, but for you to do that, there's a lot of hoops you need to cross. You don't just get up and put the money and that's it. No, number one, you have to lock it away because they know, right? So that means you're sharing. Instead of you just getting your USDT the next day, you're locking it away. You might as well have put in the cash. You might as well put in a money market fund. You might as well just go into an ETF and buy an ETF, right, and leave it for 1 year. Because that's the same thing you're doing with these guys. You're giving them the money where they go in, they invest some of it in ETF, they invest some of it in treasury, invest some of it in, just pure cash. So you might as well have just done that yourself without the fee, without the risk of counterparty risk or centralization risk there, right? So that's point number one. They lock you up for you to do that. Specifically, I think they allow $4.99. So if you join, you have a membership of $4.99, then you get APY. I'm going to leave that for a second, let that sink in. So you have to pay monthly to get interest. But you're paying monthly multiplied over the course of a year, right? If you're really, really interested about the interest, then you might as well just leave the money without paying monthly. Unless you think, you get additional, rewards. My point is not smart to do it, Between them, I can tell you last year, Circle and Coinbase, they made 2.7 billion in interest with a B, not with an M, with a B, just pure interest that customers didn't get because they get the money, they get the interest there. Yeah, I sound jealous. I'm not being jealous, but what I'm being is just being realistic to say, hey, and I'm not being jealous because again, I work with these guys. I want them to do well. But on the other hand as well, I look at my customers, right? I want my customers to actually decide what they're doing with their money. I don't want to just buy. I don't want you to just buy USDT because you heard USDT is good and is stable. Firstly, there's a problem. The problem was that it wasn't centralized. You take your money that you want it to be centralized, you move it to a place that is now super centralized, and then that centralized system is actually investing in the government that you're trying to avoid in the first place. Yeah. I'm going to stop there for now, guys. Think about that.